Me now this morning, ETF Trends CEO Tom Lydon. Tom, what are you watching as evidence that this run will continue for stocks?
Well, a great litmus test is the ETF marketplace, and you can continue to see huge flows. We had record-breaking flows last year, $465 billion coming in just in the U.S., surpassing the record the previous year of $320 billion. If the average American continues to add money, that's something that's very positive for the stock market. We don't see things slowing down anytime soon, especially as you look at the first 2 weeks.
When you look at the globe, where should investors be putting their money right now? The rest of the world had a great year last year. Yeah. Is that still the case? Or do you want to stay invested in the U.S.?
Well, unfortunately, the average American has a home country bias. It feels real good here in the U.S., as you say, John. But listen, overseas developed markets have done much better last year than the U.S. did. And when you look to emerging markets, not only has the performance been there, but from a valuation standpoint, in some cases, it's P's are half of what they are here in the U.S. So if you are investing, make sure you look overseas because there sure are some opportunities.
Go ahead.
Hong Kong at a record today. The Hang Seng there. The FTSE in London, that's at a record today. I'm sure there's other markets in there. Yeah. But for the average investor at home, everything just seems so expensive. So if you didn't put your money into the Dow Jones Industrial Average, 6,000 positive Dow points ago, I mean, do you come in at these levels?
Well, when you talk about valuations with the S&P about 22, and you look to developed markets around 15, and when you go to emerging markets at 12, people think about emerging markets as being risky. It's not the way it was 10 years ago. They've done a great job from a technology standpoint, accounting standpoint. If they want more investment dollars, they're stepping up and having to play the game. And with that, attracting more money. They're great resources as far as new developed countries, companies that are coming out of some of these countries. So please be sure that you look to some of those areas, and it's a way to diversify. We may be in the later innings here in the U.S., but it might be in a situation where in some of these emerging markets, we might just be getting started.
So I want to ask the opposite of this question of, is it too late to put money in? My question is, when do you start taking money out? This has been such a good run. At what point do you say, all right, I want to play this a little bit safer and just put some money on the sideline because I don't want to be caught with my knees capped when this market takes a turn down?
Yeah, it's always tough to time the market, and as we're going to talk about 401k plans, first and foremost, make sure that you're participating long term. At this point in time, if you've got new money that you're adding, look and see what your allocation looks like. Are you somewhat balanced? Again, everybody's investment objectives are quite different, but as far as U.S. stocks right now, diversify overseas if you haven't done that already, number one. And number two, look to small caps and mid caps because large caps really have taken the cake the last few years.
What red flags do you look for when you're trying to see if a market's gotten overdone? What's the blinking red light that people should be looking out for?
Well, the great thing is valuations, and now it's not hugely expensive, but it's towards the top end. If you look at valuations, there's some ETFs out there, like we talked about earlier, smart beta strategies that can be more value-oriented, where you might be able to get them at PEs on average around 15 compared to 22, where they are today for the S&P.
Yep. Hey, Tom, the corporate tax rate's dropping from 35 to 21. And the theory, as I'm trying to pay attention to understand what's going to happen here, that a lot of the U.S. companies have capital overseas. Some of that's supposed to come home. Right. Do you see that happening?
It will. Well, we've just seen in bank earnings how some banks are saying they're going to bite the bullet and they're going to pay it off. And we saw Jamie Dimon say, look, I'm going to take that hit now. And if you compare that to the tax benefits for the lower tax rate, it's worth it. It's a balance. And I think along with banks, you're going to see other companies doing the same. And as time goes on, what the government is doing in setting up this new tax plan, if they end up seeing that money coming home, it served its purpose, right?